Thanks so much for tuning into this earnings conversation with VA Tech Vabag. They came out with numbers wherein revenues were up about 10% YOY. Margins got squeezed a little bit, as a result of which other income notwithstanding, there was a flattish performance on the bottom line front as well. The question to Mr. Rajneesh Chopra, as he joins it right now, is to talk about how was the activity in the second half. Relative to first quarter, it would be muted in the second quarter, and whether things can pick up meaningfully in the second half. Remember, they have a long tail of an order backlog which they can execute over the course of the next 12 to 18 months or 24 months and shore up revenue numbers as well. Mr. Chopra, good having you. Thanks for joining in. Hope all is well.
Good morning, Neeraj, and thanks for having me on your show.
Pleasure is ours. Please tell us.
So, as you mentioned, that the margins were a bit soft. If you see, whatever is our other income, that income is coming from basically translation, benefit of the dollar, right? So, since we had a very strategically widespread order book, which has a substantial component of international orders, I think that is something which has given us an upside. And as far as execution is concerned, as you rightly said, we have almost a 3x visibility. And if you recall, even in the last quarter, I had said that we have a little challenges which are getting now totally ironed out to a pre-COVID levels on the logistics and supply chain front. So although it was coming to almost the same level, but this Ukraine-Russia war had its own impact on that, and now we are back on this thing, and based on our order backlog, we are pretty confident that even historically, if you see, our second H2 has always been much more than that, and especially Q4 has always had a very big number going forward.
Sorry, I'm just wanted this clarity. Are you trying to say that the other income was operative in nature, and which is why the margins, while reportedly are lower, otherwise they would be higher? Can you explain that, please?
Yes. So whatever other income is there, it is primarily coming from dollar appreciation because of high international order backlog. But based on our accounting principles, it's always classified as other income. And it's not only that, although we have got a benefit on the dollar, we have definitely got a hit on the euro, because as you know that we have a substantial business in Europe too. So Europe, the euro is there, but net of it, so definitely it is more of a operational income coming from the same orders. It's not that there is any other income which we are having.
Okay, let's assume we stick with your accounting principles as they are, even for H. Obviously, you will for H2. How much of a hit of the input costs is starting to get mitigated, or is it that because of inventory follow-on issues or inventory carry-on events, is an uptick, a probable uptick in margins likely to be in Q3, or will it only happen in Q4 because of the inventory things?
Okay, so I think what you're referring to is that commodity prices also has softened compared to the last year, and especially in the first quarter also. If I look at comparatively, so definitely you will see that benefit going forward in the next 2 quarters. And if they further soften, probably I think we'll be back to our original commodity prices. So definitely that will have an impact on the coming quarters.
Mr. Chopra, order book, your release of course talks about the H1, but when I look at the very strong number in Q1, Q2 order inflow has not been as strong. Now, I also compared this with what you did in Q2 of the last year, and there too, Q1 was very strong, Q2 wasn't as strong, almost half of Q1. So question one, is this a bit of a seasonal factor that Q2 order booking doesn't quite pick up, or am I wrong here? And I may well be wrong. And part two, what's your sense on how order inflow would be over the course of the second half? Because you are in a position or in a spot wherein getting orders in a lot of pockets that you're present in should be expected.
Yeah. So Neeraj, a very good question. What I would like to inform you and your viewers is that, see, our order inflow in the first H1, if you see it is at par with whatever we have executed. So there is no dip as far as order backlog is concerned. But going forward, you will see that probably we'll have a much better order inflow. All I can share at this point of time is that we are pretty well placed in quite a few orders, both in India as well as in overseas geographies like Middle East, Russia, and Europe. In fact, more in Africa than Europe. So probably going forward in H2, we find that, all these orders will be finalized. But obviously, I cannot make a comment till the letter of award or letter of intent is in our hand. But then all I can say is we have a very good, robust pipeline and which should get converted into order book in the H2. So I don't foresee any reason that it will not be there because it's within India, overseas, and definitely our intent will be to increase the overseas order book because definitely at this point of time, it's giving us an edge in the margins and cash flows.
Europe is better than Africa because of the current issues, or is it that you are anyways making a better headway in Africa? Just trying to understand geopolitically or economically. Europe is in a bit of a stress.
So even if you see Europe, most of our European entities, they have been doing business especially our Austria entity, they will do more of a business in Africa and Saudi. And other entities like Swiss, Czech and all, they are more dependent upon the local market. So as far as Europe is concerned, even as we said, we will be happy if they are at status quo kind of a thing, because most of their orders come from technological innovations. Just to give you an example, like Swiss, today they are the market leaders. That is the first country to introduce removal of micropollutants from water and wastewater. And Vabag has been successful in executing a lot of projects and quite a few are under execution. So even if, they are, growing nominally, we are pretty contented with that. As far as Africa is concerned, if you recall our previous interactions, we have always said that, our focus will be on emerging markets. So during the COVID, obviously there was an inflow on, the multilateral funding and other funding was a bit slow. But now we feel that in Africa, it is going to pick up. And that's the reason why I say that Africa should be one of our good markets for growth. At the same time, Middle East is another market where we feel that we will have a much better footprint going forward compared to what we had in the past.
Okay. Any update on the bid for the Chennai desalination plant? I mean, at the end of Q1, I think you had told me that it will be known in a couple of quarters. Known as yet or still some time?
So like you, we are even very curious to know about it. All I can say at this point of time is that we have, submitted all the technical clarifications. Now it's for our client and the funding agency to decide on the date of opening. So now it will all depend upon the commercials. And once that is open, I think we'll be the first people to come back to you with the result. Okay. And we're all keeping our fingers crossed and hoping.
But you reckon it'll happen in Q3? The timelines as they stand?
We are very hopeful about it. But then these are all government large tenders. So as I said, even on whatever you see as our order intake for the first H1, probably since we are well placed in a lot of orders, we are hoping for a much better H2.
Most certainly. Actually, just going back to international, because I missed that, you mentioned Russia. And I think in the end of Q1, you had spoken about how you had resumed working, if I'm not wrong, on an order which you had stopped earlier. Some color there. And since you mentioned Russia, I mean, orders coming in from that geography?
See, all I can, share at this point of time is that, it's a focus market for us. We find that maybe others' problem is an opportunity for us currently. Our more or less, but the key thing is that we want our payment to be secure. And since these are international orders, without LC, we will not be executing any of the projects. So that's what we are working on. We'll be selective in picking up the orders. And most of our orders in international markets, as I said earlier also, they will be EP. So in new markets, we are not taking on the construction. In some places, it is with others. In some places, we have strategic partners who are taking the construction because we find that, especially in newer markets, it is a risk and we don't want that. And in EP, definitely that's our core strength, and our margins and cash flows, they only aid our balance sheet.
Okay. One final question on the gross debt, because that's come off, I think, quarter on quarter, or at least from March on to September, there is a reduction there. You reckon you would continue doing this over the course of the next few? At what levels would you be comfortable holding on? Maybe you're comfortable right now also, but maybe you are on a debt reduction drive. So I'm just trying to understand, how does this progress?
I think we are already, as you have seen, that we have controlled both, even our finance charges is a testimony of that, our reduction of the debt. Now, going forward, what we feel is that by the time we end this fiscal year, we'll definitely be cash positive. And there's a very concentrated effort towards that. And maybe over a couple of years, we intend to be a debt-free company.
Okay. Mr. Chopra, we wish you all the best. Thanks so much for taking the time out and speaking to us, and looking forward to some order inflow conversations at the end of Q3 or Q4, as the case may be. But thanks for speaking to us today.
Thank you. Thank you so much.
And viewers, thanks for tuning in.